The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 22nd day of October. My pleasure to be here, almost wrapping up October. Can you believe it? All right, so let's do a couple of things here. We'll run the Dow. The Dow is down 109 at 25,337. There was a rally attempt this morning. I said to subscribers to my opening call, we remain short. We do have a couple of long positions, but we do remain short. The down the SMHs, semis. And one of the things I looked at over the weekend was those monthly charts. I needed Friday's close to really gauge what I'm looking at. Look at this. The technicals in the monthly chart are really close to deteriorating, but we have got about, what is it, 7 sessions to go, 7-8 sessions to go before the month ends. So let's just say it's on my watch list as a potential decline that takes time and perhaps points, but definitely time. That's the way I'm looking at it right now. So here we go. The Dow is down at 25,322. The 9-period exponential moving average, that pink line right there, 25,583, very strong resistance. It's hit the 200-period exponential moving average of 24,899 and rallied off it to the 9-period moving average. It's had 1, 2, 3. This is the fifth session where it's tried to get over the 9-period moving average, and it's failed so far. MACD is still very negative. Stochastic is better, but it's now reversed down at 29%. That's really not good. And it's that weekly chart that's gone to a sell mode. It's going to take a lot to get this to reactivate as a buy signal, which will then go to a buy mode maybe, but it hasn't changed that yet. It really needs to close above 25,800 to consider it. Certainly the 26,200s in the next 2 weeks, that would be very impressive. I don't think it's going to get there. S&P. S&P is right now down 6.66 at 2761. High of 2940 back in the 21st of September. That was in September, third week. Comes down sharply, goes to 20. Did I not type that in? I thought I did. 2710.51. Let me just type that in now because I'm going to be saying it all week, and then it'll have to be 2710.51. And it goes to that low. There it is. It goes to that low on the 11th of October. Tries to rally. It goes right to the 9-period moving average, and then it fails. And now it's really struggling to even hold the 200-period moving average at 2761. Parameters to watch for the Dow. I'll just say that if the Dow closes under 25,250 at any point in the next couple of days, that's very negative. And for the Dow close above 25,580, 25,620 over that resistance would be impressive. The S&P over 2792 would be very impressive. So far, it hasn't been able to do that. And it's at 27. It's right on that 9-period exponential moving average. A close below 27.48 would be very negative. Weekly chart, sell mode. Monthly chart has so far got a peak E in place. I see no reason why you could even expect in October that we go above 2940.41 to extend leg E. This looks like it's going to be a peak E, and we've already broken under the 9-period moving average. We're on that now in the monthly chart, and the 14 periods at 2703. QQQ, 1, 2, 3. The QQQ Invesco Trust Series, 174.17 up $1.50, and allows the action. Goes from 187, the last all-time high on October the 1st, plummets down to 167. That's a 20-point move. So that's what, for about 12% or more. And now it's trying to rally back. It's having a terrible time. Weekly chart, sell mode. Monthly chart, same as the S&P and the Dow. This is a big red candle. We'll be watching closely. If in October at any point it goes under 166, that's very negative. A move above 179.80 would say, hey, nice counter trend rally. That's all I would treat it as. IWM is, of course, the iShares, the Russell 2000 ETF. 173 is on August the 31st, and 150, what happened? Oh, that's over the weekend. I lost some data. Something went wrong. 151.89. Let me just put that in. It was the most recent low, 151.89. And lo and behold, we spike up just fractionally over the 9-period moving average. And since then, 1, 2, 3, 4, 5 sessions so far, the 156.13 level is now the 9-period moving average resistance. Just hasn't been able to get there, let alone hold there, but get there. Weekly chart is terrible. It's just terrible. And the monthly chart in the Russell 2000 is way under even the 14-period moving average. And this was a harbinger of things to come with the SMH, the semiconductor index. When it started to lag this year, it was a harbinger of a sell-off. I don't know if it's a harbinger of the other indices to follow and go to sell signals in the weekly. We'll see. It hasn't yet done that. We have to wait for all of October to conclude. Gold was down a little earlier. It's down 4.5 at 12.24. It's that rectangle formation that I spoke about, like a propeller shaft. Here's that little wick that goes. I didn't write it in, huh? That goes to 1167.1 on the 16th. So at 1161 point, I think I said 16th on, was that October? No, that was August. 8, 11, 18, had a real nice move, and it created a rectangle formation that I treated as the fulcrum, like the propeller shaft middle, and then it broke to the upside. It could go all the way to 1240. It hasn't yet. So far, that 12, right there, that 1229, was it? 1236 area was the high, and it's just struggling. It's made that propeller shaft. Now it can come back into the propeller shaft, which means that the high of the 28th of August, 1205.8 in the continuous contract, probably going to tag that. If it goes under it, that's very negative. Silver's also like that. Look, silver is not so great right now. It's pulling back. It's just under the 14-period moving average, down 0.08 at 14.57. Hey, wait a minute. Let's look at the dollar, because the dollar should have a commensurate move to the upside. Yep, it's a strong candle. Hasn't taken out the high of Friday, but it really needs to get to 96.17 in the index, dollar index, to start a leg C to the upside. I think it's going to do that. Here's the H pattern in the weekly chart that can modulate and become a very positive cup formation. We'll see if that's even going to have a chance, but let's go one step at a time. 96.17 is what we want to see. That's really going to improve both the weekly and especially the monthly charts. Euro, dollar, EUR, USD. This is the euro dollar currency pair, down at 1.146, down 0.005. And this has gone to, oh, it just missed it. 14323. How do you remember this? 14323. 14330. It hasn't done it. It just needs a couple of little ticks lower, and it's going to go to a leg C on the downside. So far, it's holding in the H pattern, holding quite nicely. USD, JPY, this is the yen. Did a lot of work on the yen, and I'll talk about it in a short while. The yen is up 25 cents at 12.76. Not bad. The weekly chart is improving quite a bit. It needs to hold 112. And if it can get to 113, it'll be very good. I'll be back down to 150 to 100.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, Basil Chapman, Tiger Technicians Hour. So we've got the yen. This is the USD JPY, dollar Japanese yen currency pair, trading up 25 cents. This is nice. A little leg B, gray B, because it's underneath the previous high of peak F in the Chapman wave at 140.58 on the 18th of October. So, what am I talking about? 18th of October. That couldn't have been the 18th. What was that date? That was the 3rd. Oh, there's a number missing right in the middle there, right there. Huh. I noticed that. Good. So it's pulled back sharply and a peak D in the weekly chart, but holding the 9-period moving average so far, that's looking quite good. So this is really an issue. The TLT, which is the Lehman 20-year T-bond fund, is trading up a whopping 0.06 at 113.77. It's really going nowhere. And with a market like this, my thinking was that the bonds would have an opportunity to rally, get the yields a little bit lower. That might come back to help the market a little bit. But what's most important about it is that with the market pulling back sharply, my thinking was that money would come out of the insecurity of equities into the so-called security of bonds, the safety of bonds. This is telling me that the Fed is still on track to actually raise rates. So for my subscribers over the weekend, I took a lot of time from Friday, intraday, Friday afternoon, evening, Saturday, Sunday, just to show my subscribers to my opening call the reason why over the past many weeks, but absolutely over the past few weeks, I've been very negative, and I've been looking for the monthly charts to be impacted by the negative weekly charts, and that's so far, we don't know if that's happened because it's intra-month, but have a look at this. If I'm going to go through very carefully the way I've discussed daily charts, and the daily is like, well, the 120 is the rudder for the daily becomes the rudder, the gauge that's telling the weekly chart whether it should continue on this track or start to turn. And then the weekly chart, if it's impacted negatively by the daily, will itself become the rudder for the monthly. So we can't even talk about it until the end of October as a fixed entity, but we can talk about it as possibilities. So let me just show you what I'm looking at here. What I'd shown subscribers over the weekend well, for a little while now, but especially over the weekend when I showed a lot more charts, and a lot of the time it was the same chart formation, just under different guises of techniques. Here I'm looking at the relationship of this particular candle of January, where the Dow went to an all-time high of 26,616, pullback, made that candle I talk about, all year I've been talking about it since February. It's called the Chapman Roman candle. The implications that it should, if it starts to trade halfway into that candle in a smaller time frame, then it's liable to hit the bottom and test it and probably break it. It did that. And then it went to 23,344 after 23,360. And then we started to walk the 9-period exponential moving average, the green line. Well, now we're starting to test that green line after months and months of being above it. And that's going to be very important. Why? Because look, the MACD is starting to turn down. It is almost, it said up +3. You see this little 3 right here? It's just about to turn negative. It doesn't need to take much more to turn negative, but I need to wait till the end of the month for a confirmation. And the stochastic, which was up back in the 95 area, 97 area, back in December, January, is now at 81, just about to turn down under 80, which will be a negative. I have to consider that that is very important in my work. I have always, so why should I not continue? And look at the S&P, a nice big picture of this. That S&P, that big red candle so far is suggesting with the technicals where the MACD also at +2 is really, the histogram is saying it's just about to turn down below the 0% line. You got to be careful. Not only that, we're at 87%, still very good, but way below the 97s that it was earlier in the year. So I'm looking at this and I'm saying, all right, if that's the case, then have a little patience because these are important. Look at this. This is Stanley Black & Decker. Now, if ever any company is about to tell us what's really happening in Middle America, let's call it Middle America, tools, equipment, Stanley Black & Decker was at 176 in January, and right now it's at 117. I have to tell you that a 60-point decline, let's say that again, 176 in January and 117. Look at this candle right now. I don't think that's bullish. I don't see how anybody can call that bullish. Wait a minute. Let's just go through anything you want that's in packaging. Packaging Company of America, PKG. Look at that candle. I mean, just look at that candle. What was the stock that was down sharply the other day? I'll come to that. I'll think about it. It'll come back to me. Packaging Corp of America, trading at $85. It was at $131 in January. 9 months. And it is cut from 131 to this current price we're looking at now of 85. Now you tell me 15 plus 31 is 46 points. 46 points off 131. I would say that that is a big percentage. We're talking 28% or something like that, right? Look at the MACD. Look how ugly that is. But wait, let's go to Amazon. I haven't looked at Amazon at all today. Amazon was giving signals that it might not have one of its best years, November, December's. Look at this. Oh, I'm sorry. I didn't see. We've got Ben in Tallahassee. Ben, if you don't mind holding, I'll be right. Oh, we've got time. Hi, Ben.
Basil, how are you?
I'm good. How are you?
Good, thanks. So 2 things. First one is, I know you don't talk too much about the 50-day because you got your own techniques and which are pretty amazing in itself with the 9 and the 14. But if memory serves me right, looking at a lot of charts over the weekend as well, if you pull up the Dow on a 50-day weekly, I believe that extended quite a long time and held that, where they had several, 3 or 4 touch points. Is that correct?
So the 50 moving average on my daily comes in right on the daily.
On the weekly.
I'm going to get there right now. I've already got it on the daily, so I just wanted to show 25,866. Now I'm going to put it in the weekly. Let me just do this right now. Insert indicator. Might even be there. No, I think I took it off. I didn't want to make it too messy. And now we're going to go to moving averages, and we're going to go to indicator right there. Exponential, click. And now I'm going to change that to a 50, and I'm going to make it a dashed line. I like to have them all do the same thing, otherwise they get very confusing. Make it a kind of a light gray, and the style is dashed line, and here we go. Yep, there it is, at 24,720. So I'll be right back. We'll be back with Ben in Tallahassee, and I'm going to make, just for example right now, I'll make this nice and bright so we can see the 50-period moving average. Basil Chapman, Dow's down 190, S&P's down 15. I'll be right back with Ben in Tallahassee.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back, and I'm not sure what happened, how that rectangle got in and we get rid of it. Yeah, so we're back and we're on with Ben in Tallahassee. So, Ben, I've got this. I made it a big, thick pink line, and I've still got all my notation, so it doesn't look that clear. So let me do this. It'll take me 1 second to do. I'm going to go right here. I believe I've got a weekly chart sitting just waiting for me right here. Yep, I do. There it is. And well, that's not going to help me either. All right. So you got a question. Well, let's see. What's the question?
Yeah, I thought there were several points where it actually touched that. over the past 12
It
to
actually
18
hasn't.
months?
It hasn't. It's
If I'm
gone
not mistaken.
right to it, and I've got this dash gray line, which really shows that if that line goes, then that pink 50-period moving average of 24,721 is going to be really important. And there are so many things that says 25,000 is really important to hold. You've got the 200-period moving average just below that. It's a round number. We've been there once before and bounced above it. So the dashed line comes in at about, it depends on when, but it comes in at about 25,000. But the 50-period moving average, and I'll do it this way, I'm going to scroll, and you'll see that it's really quite far.
My question was, do you see the same approximate level? Although I'm pulling up a different time frame and a different exponential moving average, do you kind of see roughly the same trigger point where it could certainly send the market a whole nother level down?
Absolutely. So this is what I'm looking at. When I'm looking at this particular chart, you'll see that I've drawn in this rectangle formation, and it goes down to the lows of the 23,300s. My suspicion is that in this particular move that we're looking at as we speak, if there is a rebound, it better come in within the next day or so, because if it doesn't, there's a very good chance we will take out very easily the low that was made 3 weeks ago of 24,899. That was the week of the 12th of October. And if we do that, that'll automatically take out the gray dashed line. If we close below that, that 24,720 level is just waiting. That's the 50-period moving average. One of the reasons I remember now very distinctly, I had it on for a while. I like to put on when people tell me that such and such a moving average is important. I never dismiss things. I always say, okay, let me give it a try. And if I find it just doesn't do anything for me, I just get rid of it. And I think I found that on the daily, it had a little bit more import than it did on the weekly chart. And on the monthly chart, I have other tools that seem to work even better. So I'm going to do this right now. I'm going to say, let's see, make it disable. I'll keep it there, but I'll disable it on this particular chart. But I'm just looking at other things, and it's that rectangle. The flag, let me just talk about this. The flag pole that was formed from 26,616 in January in the weekly chart, January the 26th, that high, peak E and a Chapman wave 5 in the Chapman wave methodology, slumping to 23,360 with that particular candle in the monthly, the Chapman wave Roman candle, with an arch formation test from 25,800 down to a slightly lower low of 23,344, then landed up, rallying to a point where the 9-period moving average and the 14-period moving average kept becoming very strong support levels for a rally towards, in the rectangle formation, close to, exactly on or just above the all-time high. That's what we call the flagpole, going to 26,616. We went to 26,951. That's not just a hair. It's quite a bit over. And once it closed above and all the rest closes underneath, and that says to me that there's a real good chance that even if I did a one-to-one relationship between the 3,000-point decline in January to early February, 3,000 points from 26,951 still takes you to the 23,900 level. So I'm suspecting that we will test 24,000, and it'll probably be fairly soon. And if we don't, then this trend line right here at 25,000 is going to have to be like a trampoline, like a trigger. And I'm looking at this and I'm saying, what news could it be? Because even if there's good news on one front, at this, most presidents are able to attack one or two issues, big issues in the lifespan of their presidential cycle, and do it pretty well. To be tackling, I mean, Trump is tackling almost anything that comes in front of him. That is really tough to do. So the big picture is that he has been solely responsible, because it's now his opportunity to take the pleasure of being Mr. Stock Market President, and he went from right there. That was in November. He went from the low of, what was it, right there. So that goes from 14. November the 16th. It was around about 15,500, and it takes off and it goes to 26,951. Same president who was can take responsibility for the bull phase has to also take responsibility now for this consolidation.
And that actually lends itself well to my second question. So I'm glad we're in sync with that. Because I believe you're still expecting a coda phase run up, correct?
I'm expecting another phase going to. Yes.
And if so, could you remind us? Is it based on your monthly charts that give you that inclination to continue to think there's a strong coda phase ahead?
There are three angles to the whole thing. Number one is I'm looking at this as if it's a very big Beethoven piece. And in Beethoven pieces, when he gets to that final movement, anything can happen because the coda sometimes can be as long as at least half of the movement itself. And we're looking at this big extent. Why do I call it a coda phase? Because my inclination still is to say that when this completes, when this big major bull market completes, we're going to have a very difficult time politically, economically, socioeconomically, and in other ways that I don't even want to get into now. And the icon for me, and we still haven't seen it, is to be naming the tallest. I don't think we can get anything like the building that's going up. I think Burj Khalifa is the tallest building in the world right now. Now they've got the new one, and I don't think we're going to be able to even talk about a mile-high building here in the United States, but it'll be the biggest in the United States. So I still think that's coming. Boston, I mean, we're about to go through an upheaval, I think, in the real estate area. We've got at least now the 9 buildings, major buildings, going to be put up in Boston, and each one is going to be pretty big, a skyscraper type building in Boston. We're not the skyscraper city, but we've got some pretty tall buildings. So this whole thing to do with fashion, to do with, it has to do with everything from tattoos to, I had an email from someone over the weekend, a 500,000 Rolls-Royce SUV is about to be delivered. So this is all going towards this climactic moment. But I think what's going to happen is we have to have this digestive phase first so that we can reestablish what sectors and what stocks will be there. But my concern is that we might be looking at a lot more time in this consolidation than many people think. And that's why I'm saying be careful, be a little cautious.
Good. Basil, thank you very much.
Thank you very much. Always
Have
a great call. Ben in Tallahassee, and we'll come back with Dow down 177. We've got a lot of time to go through many charts. Right, Basil Chapman.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi folks, we're back. So just on a very short-term basis, on the last a cup formation, I was looking for a retest of the high of on the 2-minute chart in the E-mini at 11:38 this morning Eastern time of 276525. It did in a shorter period of time. It went right there at 8 minutes past 12. It did that exact. Then it pulled back to a lower low, and now it's trying exactly the same cup formation, and that says by. Yeah, I don't have it to that level. I do have it to this level right here. 2763.25 in the next, by 1 o'clock, it should try to get there. It's at 2759.50. This is really tough. Now, I have to be quite honest about this. Yep, we short from exactly the, in the Dow, that peak DE was confirmed on the 4th, only at the close, but on the 3rd, that candle, that doji candle said to me, my subscribers are going to want to know, because almost always at D and E, we're looking to go short the Dow over the last many years. That's where we look. We don't always do it, but that's where we look to do it. And it went to an E with a doji candle with weakening technicals. We went short at the opening the next day only because it had all the criteria that I look for a good risk reward. I wasn't thinking where or when or how. I was thinking what. And that the what was answered by saying doji candle, if there is a lower low today, there's a real good chance that we're going to test the 9 and then the 14-period moving averages. And then those candles, remember, I typed it in there. That was a Chapman Wave Roman candle in the daily, the one that we were looking at in the monthly in January of this year in the Dow, but this was a daily. And it said if it went halfway into the wick, there's a good chance not only would you go to the low, you'll take out the low. We did that. We created a second Chapman Wave Roman candle and did exactly the same thing. And since then, it's been down straight to 24,899. Big bounce up to 25,008. What is that? Around about the 817 area. And now it's pulling back. And today I thought if ever there was an opportunity to have a really good rally, today's the day. So I said to subscribers, counter trend rally, and what happened was the futures were down about 12, and then all of a sudden they came back, and they came back to like -2 or something. That was really good action. And then the futures ran up really nicely very early morning, had 100-something point gain, and then whoosh, the rug gets pulled and it pulled back. I never expected that today would have both of what I was thinking. I thought it would be one today, one tomorrow. We just did it in a matter of 30 minutes, 40 minutes. We were up and then down. So this is just bearish action. And I'm just saying to you, in my experience, and of course I've had a lot of experience, I've been around in this business for a very long time, the tide is most important. If you can identify the tide, you know, when the tide starts to rise, it lifts all boats, because that's what a tide does. When a tide starts to sink, it takes down lowers the level of anything that's floating on top. Well, I believe that the daily has gone, it's on its way to low tide, but that could have little rip tides within that. The weekly is a little different. It's on its way to low tide, and it's really struggling to have any traction to the upside. The monthly tide is just saying, you know what? This is the moment where there could be a tidal change, but to use the proper icons, it's this candle. I can't anticipate what it'll be on October the 31st. All I can say is if, and it's if the Dow manages to rally to above 26,200. I don't care what the reason is. That's going to say, you know what, we're raising the base of support. It's making that 9 and 14 period moving average really strong support. But if we start to tank and we go even lower, and as I said to Ben, this is a period fraught with so many things, interest rates, crude oil. We didn't even do crude oil. Look what happened to crude oil. What is crude oil saying together with copper? Crude oil is saying, you know, I was doing real well, but I'm just holding in this upper range. At 69.20, if crude oil starts to break under 66, I think crude oil is done for a little while, and that's going to be telling us about the economy. And look at this, copper. Copper today is up a little, it's up a tad, 0.003, but it had a big rally, and now it's once again, it's done this so many times. It's stuck in a range in the lower bracket, in the lower rectangle. So until copper at 2.78 can get to 3.1 and hold, that's something. Oh, sorry, John in Philly. Hi, John, how are you?
Basil, I am excellent. Thanks for taking the call. I am calling right here just in response, or thought occurred to me, wanted to ask you to elaborate, given what you've just said in describing your read of the Dow and what you've done tactically for your clients and yourself trading-wise. And the very specific question I've got is this. Well, first I'll observe exactly what you have, namely, we've fallen, we back off, and we see, including this morning, bursts of rallies, but they clearly are some form of short covering rally because they don't hold. Now, I just observed that
John,
the S&P daily...
John, I just wanted to say, we can't make the inference that there are short covering rallies. We can say there's a chance, but there are buyers as well as sellers. And my thinking here is, because of what happened in the market last week and because of what happened in the futures earlier this morning, that there's a chance that we were seeing some real buyers. Because when I was at my fitness center and I saw the ticker going by, I saw that there were many people that were buying the favorite stocks. They were the ones that were up a point and a half, going into the 9:15 time frame. So I just wanted to make sure that I think the trap has been that there have been tentative buyers, and those tentative buyers just aren't. There's no real conviction. That's why the volume then just immediately dries up, and you get the pullback. And that combined absolutely with some short covering. But I think my eye was telling me, being a ticker reader, that there were buyers, and those are the buyers that I'm not sure they were short covering, because they weren't like 4 points up on $100 stock. It was just like $1.50, but that was important for me. All right, continue. Sorry.
Yeah, no. In fact, you're answering part of my question with that elaboration, so I do thank you for that observation. So let me just wrap up the question, or line of questioning, by observing that on the S&P 500 cash daily chart, the bounce that occurred off that low October 11th, that Thursday, it ran right up to the 9-day exponential moving average.
Yep.
Which you taught me is so invaluable in governing trending markets. And of course, we don't have proof yet that the S&P 500 cash daily chart is a downtrending market. Could be, but not yet proven. So my question is, now that we've popped up, and in the subsequent days, including today, we've had rallies, be it buyers at the lows combined with short covering. My question is there anything that you can share with me that you've learned over the years that would tell you, okay, fine, we've bounced up repeatedly to the 9-day EMA. That's now enough. Now this is the clue, this is the signal that another selling wave lower is about to
Good
embark.
question.
I'd appreciate it. I'm going to hang up.
I'll deal with that as soon as.
Thanks so much
I'll
for
deal
taking
with
the
that as
call.
soon as we get back. Very good question. I'll be back, folks.
Strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Hi, folks. So let's just get to, we got just a brief moment here, and then we're going to go to Steve Rhodes. We're going to go to Dave White, and of course, you've got Tom O'Brien. The question really for me is, it's a twofold question, and that's the same response. Number one is, when I'm looking at the different time sequences, on the back of my mind, I've put together, I've said, the semiconductors in March made their top. I had a letter from a good friend saying he's very concerned about it. Some of them still have a 25% correction that he can see in them. And the only reason he says that is that orders were crazy last year, and they didn't make adjustments earlier this year. Now they're forced to make the adjustments, and the earnings are coming out, and they're going to be pretty disappointing. So he thinks it'll be next year sometime when the semis really come back on track for a rally. I have a different opinion on the reasons. I'm doing it technically. I don't know the fundamentals. They correspond. So we've got that. That's in the background. So when I look at the S&P, when you've had a 10-year bull market and you have just minor corrections. There was a 20% correction way earlier on, and then there was a long period of a correction back in 2015-16. So what we're really looking at here, let me just show you the chart. Let me do the monthly chart. You'll see just a little bit of a correction. What I am going to say, you see, it was time and price. 21.34 to 18.10. I would say that that's price, but it's not really 50%. But it's a pretty big pullback. So I'm thinking here that there's going to be a moment where so many things come together that are negative. I think we might have speed, and we will know that if every rally like we're seeing right now starts to fail and we make lower lows. Remember, the theme of a bear phase is lower lows and lower highs. Every rally starts off with very negative early morning pre-market, like double-digit S&P futures, tries to rally and then closes towards the low of the day. And it does that a few times every week, but basically you're going to lower lows and lower highs. Monthly chart, we can't talk about that, but we have seen that so far in the daily and the weekly chart. This is the first big move down. We haven't even had a bounce yet to start a gray leg A. So keep in mind, a close below 2,700 in the S&P futures would be very negative. And any bounce above 28.10 would be good. I'll be back tomorrow. Have a great day.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
David White's